So Bitcoin just ripped through $70,000 and altcoins followed. Sentiment flipped almost instantly, and all of it because of a ceasefire. Now, normally crypto likes to pretend it exists outside the traditional system, but today it behaved exactly like every other risk asset on the planet. So here's the question. If this is the breakout we've been waiting for, or is it just another macro-driven fake-out? Because if this move is being driven by geopolitics, then it can be just as easily reversed because of it as well. And today we're going to break down that properly. Welcome back to the Daily Breakdown. This is where we cut through the noise, ignore the hype, and focus on what's actually moving the market right now. So let's talk about the catalyst and what just happened. Over the last 24 hours, a 2-week ceasefire between the US and Iran has been confirmed. More importantly, Iran agreed to reopen the Strait of Hormuz, a critical global oil route as we know. And that single development changed everything. Bitcoin jumped up to around 72k, Ethereum surged even faster, global equities rallied, the Nasdaq rallied massively, oil dropped sharply by as much as 15%, which is absolutely wild for oil. This wasn't crypto leading, this was crypto reacting like many of the markets. So as it turns out, markets prefer fewer missiles. This is what happened. Let's zoom out because this move makes perfect sense when you look at the macro chain reaction that's been happening. Before the ceasefire, we had rising tensions, oil spiking over $100, inflation fears returning yet again, and risk appetite falling in the markets. And as we know, all of this combined means that crypto really struggles. But obviously, when you have a sentiment of a ceasefire, you get everything dropping, oil dropping, inflation pressure perhaps easing, liquidity expectations improving, and then as a result, when there's more liquidity, risk assets do like to pump. Crypto is not detached from macro, it's downstream from it, whether or not you'd like that. So yes, Bitcoin may be decentralized, but it still cares about oil prices. So let's talk about actual chart structure, because this is where things get interesting for me, as you know from my other channel. Right now, we're at around 70k. There's a major resistance here, now being tested potentially as support. The mid 60k zone is a very, very strong demand zone, and as you know, we've been ranging for a little while here. And we've got a region of liquidity at about 75k that is currently looking like it might get retested over the next few days, which I think is really interesting. We're going to have to see how things react at around that level over the next few days if the Nasdaq keeps pumping Bitcoin. Bitcoin didn't just drift higher, it basically had an impulse. And that matters because impulsive moves usually mean short covering, aggressive buying, and position imbalance, which means that you can tend to have these big aggressive moves where people are basically being forced out of their short positions, which is very interesting for me. So the question has been for a while now, can Bitcoin have a move above 70k and actually sustain it? Because if it can, this starts to look like more continuation to the upside. But if it can't, then we're going to be right back in that range pretty damn quickly. And obviously, as we know, right now, Bitcoin has been ranging heavily with all the uncertainty. So we may well see ourselves return back down. We'll have to wait and see. Obviously, we've all seen this movie before multiple times at this point over the past few months. Here's something that most people miss. This move didn't start with the headline. It started way before it. Rumors of a ceasefire were circulating for the past few days. Bitcoin began grinding higher, and then once the confirmation hit, there was a bit of a momentum smack up to the upside. Last night after hours for the Nasdaq, for example, the news was confirmed, and then when the Asia session opened, bang, up 1,000 points. Obviously, Bitcoin followed because of the positive sentiment. Smart money positions on probability, and retail reacts to confirmation. If you're buying after the move, you're relying on continuation, not opportunity, in my opinion, which is obviously a risk, which is usually when people feel the most confident and the most late. So let's talk about altcoins because they are up as well, finally. But let's not get carried away because this is only a small move and we're going to have to wait and see if we get any kind of continuation in the crypto market in general. We're seeing Ethereum outperforming slightly, mid-caps catching some bids finally, and also the broader market actually turning green for the first time in a good while. The altcoin basket, for example, looking a bit more healthy right now. They're still all reacting to Bitcoin, of course, not leading. So we need to be fairly cautious and wait and see where Bitcoin goes next. The reason that this matters is because real altcoin seasons are driven by independent narratives, expanding liquidity, and aggressive rotation out of Bitcoin, and we're not really seeing that at all, to be honest. Right now, we're just seeing altcoins having a little bit of a relief rally, you would say, off the back of all the pain that they've suffered recently. Think less alt season and more altcoins cautiously leaving the house for the first time in a while. This rally feels good, but it is fragile, and we need to talk about sentiment because the ceasefire is temporary, conditional, and politically sensitive. As we know, any kind of breach of the ceasefire will probably dump the market massively. As I said, this is a relief rally, but it's not a structural shift. Right now, if we get any kind of escalation headlines again, oil reversing higher, or risk sentiment flipping, we could see a big dump for cryptos in general yet again, and the wider market. So keep yourself a little bit cautious, perhaps. As we know, markets are calm until they aren't. Instead of guessing direction, watch for these kinds of things happening. Number one is that 70k level. If we can hold in this area and get a bit of bullish continuation, we could see ourselves heading up towards 75 or even 80k if we could break out of this local range. But right now, obviously, if we do see any kind of sentiment dropping, then we're going to be going back down towards 65k yet again in the range. Number two is oil prices. If we do have oil prices dropping, then we're probably going to be seeing some more positive sentiment for Bitcoin. But if they start surging up again, we're going to have some pressure on cryptocurrencies in general and the NASDAQ, to be honest. Number three, obviously, is headlines. If we have nice stability and not many headlines, we'll probably have a chance for Bitcoin to bounce. If not, then we could see more volatility in either direction. This is obviously right now a macro-led market, as we've seen. So very simple. If the macro improves, we get a ceasefire or a permanent peace between Iran and the US, then cryptos will most likely have a big rally to the upside. But if the macro worsens, as we know, we could see crypto heading back down. Bitcoin could finally go back down towards that 60k level that I think could get hit if we do see some worsening sentiment. So is all of this a breakout, or is it just another fake out? Because right now, it's neither really. It's just a reaction to the wider market. And reactions don't last forever. Trends do. So if you got value out of this, you know what to do. And I'm genuinely curious, do you think this holds, or do you think we see another rejection and head back down? Things have been pretty wild recently. So let me know your thoughts. Because if there's one thing this market has been very good at recently, it's getting people excited right before doing the opposite.